Hello traders, welcome to another Freaky Friday. We had a Freaky Friday last week with Trump and his Greenland stuff. We've got a Freaky Friday today in the yen and everything going on. So nice end to the week. I've had one of those days where I sat down at, it's 7:15 or whatever. And next thing I look at my clock, it's 11:30, nearly 12 o'clock. I've just only finished with breakfast. Yeah, busy. Who have we got with us today? Who's in the house? Do I see Stelios?
Hello. I'm here.
Good afternoon, sir. How's it going?
Very well. How are you?
Yeah, I'm all good. Still got a bit of energy. I'm going to be crap about 2 o'clock this afternoon, though.
Yeah, it's been a long week, hasn't it?
Yeah. Good. At least it's only the third week of the new year. Only another 49 to go until we get to the end.
Well, we're getting a lot of action from Trump and all that stuff, so a lot to talk about and to look at markets.
Hey, yeah, absolutely. I'm going to bring
Gregor.
you in. Oh, here's Gregor. Here he is.
I'm here.
Are you on holiday, mate?
I'm going skiing.
There we go.
Tomorrow for 5 days. Yes.
Nice.
Very nice. Yeah, yes. I'd like to see some snow, but no, bring me some back. Can you put some in the post? Send it over.
Yeah, I will.
Right, so I've got two people who we can see some charts from, but just going to run over, just in case you're just waking up, you Americans, just getting into your cornflakes, just to give you a quick update what's been going on overnight and in the European session. So we had the Bank of Japan meeting, which was a pretty dull affair, really. No change to rates as expected. They upped growth forecasts for next fiscal year, took them down for the year after. The comments are all still, along the same lines. We will hike when we achieve our outlooks, so on and so forth. Ueda wasn't hawkish. He wasn't dovish, but he wasn't hawkish. He was neutral, or unhawkish, as I like to call it. There were some comments from him that, they are expecting CPI to drop under 2%. They're uncertain how long that might go on for. So there were a few little comments that just may have got the market thinking, okay, a hike might not be coming sooner rather than later. But that's the usual BOJ stance, caution. What happened after, though, was obviously the most interesting. When he'd finished his presser, yen pairs were rallying. Dollar yen was back into 159, looking like it was going to have a crack at that prior high until we got that big fat candle, big fat move down. Sudden move down, sitting here, and all of a sudden it's trading 157s. Got down to 157.37. Now, obviously, everyone's jumping on it's intervention. But it isn't intervention, or that we know of as of yet. Usually, the MO for intervention is they give it a big whack and it will go 300-400 pips. You'll see it go to 157, then you'll see it go to 156, then you'll see it go 155, like that. The fact that it bounced pretty quickly off of that indicates two things. Yes, it may be intervention. We can't rule it out. We won't find out until Monday when we get certain reports from the Bank of Japan that will indicate whether they did anything. Or it could have been what they call a rate check, where they pick up the phone and they call around asking for what the rates are. That spooks the market into saying, oh, hold on. The Bank of Japan are on the phone. They must be looking to do something. Obviously, that will be at the behest of the Ministry of Finance. Or it could have just been someone getting a bit nervous, been short yen, maybe near the top, or, didn't want to carry the risk. Just decided to exit out, and the market gets a sniff of that, and everyone jumps on the same boat. Could have been an order going through something, and it just triggers a move. Could have been people spoofing the market, trying to trigger a move from that. So we don't know. We can only put together the evidence that we got in front of us. There was no move in JGBs. There was no move in the Nikkei. There was no move in other pairs. There was a little spike in cable compared to some of the others, but nothing of note elsewhere. So we don't know exactly what it is, but experience tells me it's likely to be either someone having a little bit of fun and games, or maybe a rate ring around. But it is what it is. It's a warning to everybody. This is what trading the yen is like when you're in heightened intervention risk. And you need to make sure that you're accounting for that in your risk management if you're trading the yen. Since then, we've done nothing. We've come back pretty much to the middle of the move. And that is the market saying, okay, we've had a bit of a slap round the chops. We're not going to push it one way or another. If we do get information, news, headlines, whatever, that this wasn't any form of official intervention, verbal, phone calls or anything, there's a good chance that we do rally back up. However, we've already had the finance minister saying that she won't comment on whether they intervened or not. The FX diplomat saying the same thing too. That's what they do. They're never going to give it away until we actually find out in the numbers. So they'll ride that coattails as well. So there's a bit more nervousness in yen pairs going into this weekend. There's also a bit of risk news to take into account. We've got this Ukraine, Russia, US meeting happening in the UAE. On the Ukraine side, Zelensky is saying he's got all his agreements put together. They just need signing off. Now, the obvious act is that it goes over to Putin and he's going to either say, yeah, we can work with this, or no, it's not good enough and we're back to square one. So there is the potential for some risk moves, gap moves over the weekend, depending on that news. The market switches off trading, on and off trading this headlines, this situation as it sees fit. Some quick other news. Data out of Europe has been okay-ish. Some things have been a bit mixed in the PMIs, but overall, they've been fairly positive. Same with Australia. They have positive PMIs. New Zealand had some positive inflation numbers. So we've seen moves in Aussie dollar, particularly. We'll have a quick look at that. We're making a decent move above the 6,800 level now. We were faffing around it yesterday, a bit indecisive. We had better PMIs that shot that up as well. And as you can see, we're continuing with that move as well. Gold looking pretty strong, stocks holding up as well. So risk mood is looking good. Aussie Kiwi reflects what we saw in the data overnight. This move down coming on hotter New Zealand CPI, pushing quarterly measures, but it pushed the year-on-year number above the RBNZ's price band, as they call it, 1 to 3%. That's also now 5 quarters where that inflation has risen. So they're certainly not going to be cutting anytime soon, hence why we saw that bid in the Kiwi, which then turned around on the better Aussie PMIs. So overall, we're looking at, you could say, better risk picture depending on what risk you're looking at. As I said, gold is still holding up pretty well. We're not seeing any massive dips there. Stocks also holding up as well. No massive dips there. S&P sitting nicely at 6,900. So everything's to play for. The Yanks are coming in. And Stel, I'm going to put you up first, mate, to give us a little look around and what you're seeing in markets at the moment, mate, regarding risk and everything else.
Sure thing. Let me take the screeny. Let's share, replace. Oh, there we go. Hold on. Share screen. Desktop 1. Okay, so the main thing, obviously, was developments with Trump and the art of the deal as he does it, which is basically, he said it in this book. He said that I'm gonna, whenever I want to negotiate something, I go all out asking for pretty much everything, and then I settle for something less, which is more than I want to have. So this is what he's doing again. He's all guns blazing, and then suddenly he goes, well, we're not going to be using force in Greenland, and the market likes it. So I still think that what I said after the December FOMC cut stands. I think we have a quarter of risk on coming, and if I was a short equities, I would be worried because every reason that we could have for stocks to be dropping is kind of falling away. So the path of resistance I still think is to the upside. So with that in mind, of course, barring any black swan events or something that Trump tweets, midway through his sleep. I think we're going higher in risk, which means that the only thing that can really derail this move is yields. And yields, as we've seen in the past, when we do get a squeeze in yields, that's not good for risk theoretically. We are actually, we've been talking about 420 being a magnet for 10-year US. Well, we broke above, but we're now at resistance. My core thesis remains that the yields are going to resolve to the downside, but we're getting to levels now above which I'm going to reconsider this. So if we break above this triangle, which we're close, then I will reconsider. But at the moment, and it's a similar story with 10-year gilts. We broke down, now retesting. So it's an interesting situation. Certainly, if we do break lower in yields from here, or if we do continue lower from here, then that's going to be a tailwind for equities. But for now, I don't see any big risk to risk assets going lower. So if we look at the S&P, okay, maybe I haven't drawn this perfectly, but this is a sideways consolidation pattern. RSI in the middle, daily RSI in the middle. So nothing bearish about this for me at the moment. I still think these are going to be continued to the upside, and it's a similar story with DAX, which did print new all-time highs a few days ago, and is still looking, nothing bearish about this either. So, I don't have anything new to say on these from the last time I was here. The dollar is interesting because it also has been kind of consolidating sideways. Actually, if you look at the euro, it's a little bit better. There is a very, okay, let's go to the weekly actually. Weekly, there we go. There is a trend line going back to 2018, which has had a few touches. So that's interesting. That's a very interesting level to see. And it's going to be coinciding close to these highs at 119.18. If we do get to this, I am definitely going to be trying a short. The Dixie overall is consolidating sideways for the past few months. And one thing I did say last time I was here, I think that the dollar, I do think that the dollar will eventually rise, but there are two currencies which I would not want to be long the dollar against. One is the dollar MEX, and look what it's done. And it just keeps plowing towards the downside. We are getting to a fib level. In fact, I think we are probably going to be close to a bottom on this pair. I mean, it's done very, very well. It has good carry to be short as well. So I've had this conviction for quite a while, and it's been doing very well. I think now getting close to the low 17s is probably a good time to be squaring out any shorts if you have them. And as I said, it's been a great run, and I think that we will be. And look at the RSI. Daily RSI is very negative here. No, negative. You know what I mean? It's 20. So not a bad place to start taking off shorts here. And the other pair.
It's funny you mentioned. Sorry, mate. It's funny you mentioned dollar because I'm thinking about doing exactly that because I'm still short a little bit from up at the 21s, near 21.
Yeah.
And I've got a big level at 17.40, so I'm looking to take profit on that short.
It's a very good point to do it. Very good place to do it, I think. Even today, where we are here. I mean, if you've done that, I would be getting out, I think.
Yeah, I'm greedy. I want those extra couple hundred pips.
The other one is your dollar Norway that I said I don't want to be long of. And, we broke this channel, tested it once, tested it twice, and going down. And look, we're very close to this. Well, very close. We're close to 73.8, which is the low from September. So again, this is another pair that I would not want to be long of. Of course, if you have been short, this is not a bad place to take profits because you never know how it's going to react down here. But overall, some dollar pairs are doing better than others. The Aussie, I've had a bullish bias on Forex Analytics platform for a while now, and it's been doing well. But now we've reached a zone which is which I had highlighted some time ago. So again, another pair which, if you had been long this, not a bad place to be taking profits. Let's have a look at metals because we have to. Gold. I mean, look at the RSI since September. okay, dipped down a little, but I mean it's been near or above 70, 75 for quite a while, and it's just not looking bearish in any way whatsoever. So still very bullish these. Of course, I do prefer silver and even more platinum. But with the gold silver ratio now below 50, I think switching out of silver back into gold, if you have been long silver instead of gold, I think it's not a bad place to do it. But my favorite one, okay, let's have a look at silver first. I mean, this has been almost vertical as well. Another nice little consolidation. It's just every single day almost we're moving upwards. And if you look at the weekly, we've had 2 or 3 red candles over the past few months. So it's just absolutely ridiculous. The problem with silver longs and silver bulls is that now people are starting to talk about this quite a bit. People talking about $200, $300 silver. When I hear that, I start getting a bit cautious. I think we're going to break 100. Obviously, we're very close now. Once we get to 110, 120, I think that's where we're going to start seeing some proper two-way action. But for now, this is very bullish, and platinum is even more bullish for me. And this is one of my main positions for those who follow in the chat room. And I'm still carrying just over half the position that I had originally, and it's just been going crazy. So I love that trade.
A quick question, if I can, still.
Yes.
Are people not thinking about the inflationary impact from these precious metals going up, rocketing up? Silver, yeah, it's a precious metal, but it's used in so much, green technology, solar power. That's a big thing going on at the moment. And when it's okay when prices are $28, now we're nearly at $100. No one's talking about the potential inflationary aspect of these precious metals rising. Is that something we should pay attention to?
Definitely. The question is the usage of silver and platinum. Okay, you correctly said that in solar panels there's actually quite a lot of it, but in other applications like mobile phones and all the other stuff, there's actually as a percentage of the cost of the product, it's not that much. It's the same argument like people say with platinum. Well, it's inflationary. They're using catalytic converters. Well, a car costs 50 grand, and platinum is about $100. So if it goes from 100 to 200, does it make the difference to the price of the car? Of course not. So it depends on the actual usage. And you're right. Solar panels do use quite a bit, and eventually, these prices going up are going to have an effect. Of course they are. But I think it's a much bigger effect that's going to be had by, let's say, oil spiking. So you're right, but I think the effect, the extent of that effect is not that significant at the moment, especially for platinum and palladium. So yeah, that's a good question actually. You do have your moments.
I've won a year.
What else shall we have a look at? Okay, cryptos we have to look at because again they are underperforming in quite a big way, and this should be worrying for crypto longs because we've had risk assets not flying, but they are marching slowly higher, and cryptos are dropping. And if anything, this is a very bearish consolidation the way I look at it, and we're down from 126 down to 90. That's 36k out of 126. Man, that's like 30% or whatever that is. So it's a big drop given that equities are at or close to all-time highs. So this is looking not good at all. And again, I'm going to say the same thing, be very cautious with this because this is, let's have a look. This is a very similar thing, and copy paste, something like that, whatever you want to call this. It's not a bullish consolidation in any way, shape or form. So I would be very cautious and imagine what happens to cryptos when we do get some risk off. And also imagine what happens when MicroStrategy starts selling, which at some point they will eventually have to. So, I'm not bullish cryptos, I'm afraid, to those who like them. That's pretty much it from me. I don't have much else.
No, thank you very much, mate. Yeah, Gregor's here. So, Gregor, if you want to take the charts, I've got a question for you though, Gregor. First off, just taking the yen moves into account, how do you, as a a technical trader, technical analyst, and chart watcher, how do you factor in when you get spike moves like this? Let's say that this spike move down in the yen was completed one of your waves. Do you actually rely on that because it was a spike, or do you sort of ignore it?
I definitely try to consider it and respect it, because clearly these spikes normally occurs to very important key levels. They will stop around important key levels, and they will be part of the important wave structures as well. So definitely I cannot ignore them. To me, they're even more important when we get some huge moves and during an important day, events, whatever. So definitely it's very important for me to respect what's happening and what caused the move, and I cannot ignore and just say that this did not happen. So clearly I have to respect it. And if we look at the current price action here, we basically have now from the highs 3 waves down. So basically that spike low here around, if I zoom this in, around 157.30 or so, that's the most important level, at least for me for now. As long as we are above that level, the pair is still basically neutral or even stays in uptrend here, right? But I think that because we have spikes on both sides of this latest price action, I just think that there are a lot of stops beyond that levels, and when one level is taken out, I think that market will continue in the direction. So with that being said, if we start breaking 157.30, I think that we will continue to the downside and could confirm that wave 5 has ended. On the other hand, if we break 159, I just think that 160 or even 161 can be seen. As you mentioned yourself, I think it was last Friday when I was here, that interventions works only for temporary period of time, then market usually resumes on their normal flows unless they really go hard on the intervening. So that's definitely something that we have to consider here as well, and just have to wait simply on these key levels to be breaking out before we can confirm the next move. But as you said, if I ignore or I just keep an eye on those levels regarding the wave counts, definitely.
Yeah, thanks, mate.
Yeah. So overall, if we take a look on the dollar, so maybe if zoom out a little bit, so that was very important high back in November of 2025, very important resistance around 140. So what happened since then? Well, market reversed, as you can see here, clearly to the downside with very nice 5 waves without overlaps. Then we have stopped this gap from the beginning of October, right ahead of Christmas and New Year holidays. And during this time of the year, as you know, market will change the direction, and we got a very nice, beautiful rebound. We came nicely and perfectly into the 61.8% retracement. And now when at the beginning of the year flows go back to normal, we are already seeing that market is now trying to resume what have been doing before this Christmas holidays. It's been trading to the downside. So I think that this current weakness will resume, and I'm looking for dollar to continue and retest these October levels, and then possibly we will continue even lower to retest this low. So I'm still bearish US dollar. I like the fact how stocks have made some rebound recently and filled that gap from the weekly open. So at least for now, it seems like we are in the risk on mode. But I would be very careful with stocks. Here is seasonality chart going into the February. So in February, you can see that usually in January we go somehow sideways, then push to the upside, and then in February we can see a potential top. So and then a pullback. And that's exactly what I'm afraid we could be experiencing also this time. So you can compare this wedge December 2024 to February 2025, and looks like that we could now be forming some similar pattern. So I would be very careful if we see a new high from here, what then could follow potential reversal, but we are still missing this final push to the upside here, maybe to retest levels above 7K. So during this short-term period, there is a chance that the dollar will continue even lower. So I just think that current risk on mode or maybe just sideways price action is something that could keep dollar in, I think, in bearish trend. Also, if we look from the beginning of the week, from Monday, right, what is the strongest and weakest? We can see that commodity currencies obviously are outperforming. So these are the ones that maybe after some retracements you want to pay the most attention. Keep in mind that Kiwi has made a very nice, beautiful push higher recently. And I think that this recovery is still not finished. If I give you some just basic, simple Elliott wave educational approach here, if we think that that was nothing, but we see that that was very important swing low on January 09, and we can see here that that's explosive move. So explosive sharp moves are impulses, and within impulsive structures you want to see 5 waves, right? So it means that, let me delete some lines here. So it means that there is still ongoing and unfinished structure, because what you're seeing is just a wave 3. So after a pullback in wave 4, I would be looking for more upside. So if we consider that stocks have maybe room for more upside going into the February, if we consider that New Zealand dollar, NOK, commodity currencies are generally very strong right now, I think that after pullbacks, there could be some very interesting opportunities still to make some money on the upside, despite some very sharp extended moves that already occurred so far this week. But after retracement, like we have seen here, maybe in a wave 2, wave 4 can be somehow very similar. There can be opportunities, obviously, and that's not the only pair. We can also see some very similar structures, obviously, on Aussie as well, and I will keep an eye on this one pretty closely next week for our clients. And also, maybe not bad idea to keep an eye on the euro. Euro somehow is now struggling a bit at this upper trend line of this triangle, which I think sooner or later will be taken out. So far, we held pretty well at the highs. After this first push to the higher here, we tested the trend line. Then we have seen pullback, and this new swing low is very important and key why the bulls remains very strong here, especially if today we finish the week here or even higher. I just think that next week this dollar weakness or euro strength, if you wish, will, in my opinion, resume. Also, this comes in from, let me check where it is. Here it is. So here we have on the top euro dollar, here we have German yields and the US yields differential. You can see that German yields here, 2-year at the bottom of this chart, are basically trying to break out. So I think that German US yields could maybe move much higher compared to the US yields, which could move could be much slower. So rate differential in such case will move to the upside, and this is generally positive, obviously, for the euro dollar. So I'm thinking that this current intermarket analysis will keep dollar weak, and at the same time, as I said, we have stocks doing pretty well, and I think that if they hold the most recent support, swing support that was, let me check here, that was made on what, 2 days back. As long as we are above that level, I think that we should respect, and maybe the dollar could see further weakness, in my opinion. Also, looking at maybe the metals, they have seen a pretty nice strong push to the upside here, but notice that we are in a 5th wave. We are moving into very strong psychological resistance, also the technical resistance. I could also very easily say that we are already in wave 5 here. But if there is a chance, I will always try to stay with the wave count, with the trend that will take us even higher. So I think that...
Let me just jump in quickly. We just had Canadian retail sales out, which were better than expected. Headline sales 1.3 versus 1.2 expected. Excuse me. Ex autos 1.7 versus 1% expected. Not that there's been much move in dollar CAD. It's moved 3 pips. No, 4 pips now. Back to you, mate.
Yeah, thanks. So gold, as I said, still in uptrend after some retest of the previous swing highs or swing supports. We could see easily further gains, but definitely want to see maybe the price will then remain after retracement here above 4758, which is the support for on the intraday basis that matters if we get some retracement, which, as I said, maybe from 5,000 is something to watch for. At the same time, we have silver right now approaching 100 level as well. So these are very big round figures. It doesn't mean that they will be important, but usually they are. So if you get some pullbacks from there, maybe on the second attempt, the break above these key levels could be much more important and aggressive. Now, looking also Bitcoin, like Stelios mentioned, we think that it's just a matter of time when this one could continue lower. I mean, what concerns me here, you have dollar that is coming to the downside across the board. You have stocks that stabilize, but there are still cryptocurrencies, Bitcoin specifically, that is looking very weak. So what may happen here is that some investors, traders will give up on this, and they will possibly move into some of other assets. This could cause more liquidations here because they're not making any money at this stage from October already, while they're just only watching metals. So there could be some rotation, and this could possibly cause more liquidations on Bitcoin and cryptos in general, and possibly we see even a drop closer to 74K. So I think that's the major level to watch for if maybe anyone is looking for some major big levels. I think that down here between 60, 70K, I think that will be the major support for Bitcoin into this year. So still liquidations, in my opinion, will show up here. A lot of fear will spread if we get another strong leg to the downside. And that's exactly what we want to see to form the bottom when there is the most pessimism out there. So
thank you very much, mate. I don't know if you just want to quickly jump back to dollar yen. John Hawkins had a question. Could dollar yen just have finished a B or an A2 from the all-time high in 2024?
From all-time
well, it won't be an all-time high, but the high in 2024.
Yep. So that was, I just think that we will stay in some higher degree consolidation here for this on this pair. I mean, if we are in a wave 4, we can easily retest this. What was the high? 162. We can easily retest these highs. Then interventions will be even more aggressive between different central banks possibly, and this is something that could maybe once again cause some very sharp sell-offs like we have seen last year as well. So maybe that's something to watch for.
Yeah, thanks very much, mate. I see Blake popping in. Oh, and Tracy as well. So you've managed to run quickly from the Ninja studio over to our one.
Yeah, she's quicker than me actually. Good morning.
Yeah, I don't doubt it.
So what's going on, guys? It looks like Canadian retail sales came in a little bit stronger than expected.
Yeah. Not that we've seen much move in the Canadian dollar, which is looking strong anyway. Probably a bit on the commodity side and a bit of dollar weakness as well.
Yeah. And let's see here. I'm gonna go ahead and I'm just typing out a few things right now. All right. So just want to make sure everybody knew that we were going live with Tracy over here. So Grega, I just heard your voice. Thanks for being here with Ryan. I know K-Man was out today. He was enjoying a little bit of R&R. And I know we've been, a lot of us around here have been wearing a couple of different hats. So thanks for being here, Grega.
Thanks, loving me being here. Have a
Hey,
nice
hey,
evening.
Grega, can I ask you a question really quick
Yeah.
before you roll on out of here? So I just want to talk about something that I was just having a conversation with Tracy about on Ninja Trader Live. Want to talk to you guys about it. It's a I think a rather important move in price this week, and so I just want to talk this out. So you guys can see the S&P here, right? You can see my screen. We basically, after the whole Greenland situation, you can see that the S&P basically filled the gap. You can see there was a gap on Sunday. We sold off. Trump, quote unquote, tacoed, that's the acronym everybody's using, but he's just doing what he does. He's just moving the chains. And, we're further today on Greenland than we were a couple of weeks ago. Just everybody, I want everybody to think about that.
Yeah.
So that happened. We filled the gap. But then if you look at the euro, here is the weekend action, right? Here is your gap, lower, right? We filled the gap right at the open. People started buying euros right at the open, and now after the whole Greenland situation, and after the taco, if you will, the euro didn't. I mean, it started to pull back, like you thought the dollar might fill the gap, but it never did. And matter of fact, we're near our highs of the week in the euro now. We're not very far away. To me, that tells me that the market is very bearish the dollar at this point in time. And the idea to sell dollars is very real. From an Elliott wave point of view, how are you seeing the euro at this stage?
Well, as we discussed already last time, I just think that it's a matter of time when euro dollar will break to the upside. I think that with stocks that now stabilized, that it's maybe even easier for euro dollar to finally to see more gains. But we have to consider that there was some uncommon positive correlation recently between dollar and the S&P 500 in the last 2 weeks, basically since the beginning of the year, I think. But this correlation is now again normal correlation is trying to come back, meaning higher stocks, lower US dollar. And I think that, if I'm not mistaken, that's been correlation since Wednesday, maybe, if you will go to the smaller time frame, obviously.
Yeah.
You can see here you have positive correlation right now, because I believe you are looking at cash market on the S&P 500, right?
Correct. Yeah.
Yeah, but there will be some normal negative correlation between the S&P 500 and the dollar. And if stocks will hold the most recent lows of this week, I just think that there is a chance that, yes, the euro dollar will continue to the upside. But we never know with Trump. I mean, Trump always tried to calm down the markets after they sell off. So we have weekend in front of us, and I'm sure that he will be sitting on his X platform, and who knows what we will be reading on Sunday night. So that's something.
And
that
you know
we
what?
consider.
I think he's always watching the markets, even though he won't admit it. He's always watching the markets. Thank you, Greg. I really appreciate your your looks and your views. And remember, for those of you that don't know, you can get Greg has had the same view on the euro literally for the last couple of weeks. You can get his analysis right on Forex Analytix, and just click on where it says Elliott Wave Analysis. He uploads his analysis each and every day. So Greg, thank you so much. Really appreciate you. And Ryan, I'm going to bring in Tracy.
Yeah, please do.
Tracy, how you doing?
Long time no talk.
I know, we were literally just on a few minutes ago, and I'm so I know I sounded a little crazy earlier when I was talking about like my ideas about F.A.C.E. And Ryan, maybe you got to hear me out, but I want Tracy to really give me how she feels about this, because if you watch the Trump interview where people started to price out F.A.C.E, by the way, if you look at Polymarket, 6%. Now, Kevin Warsh is at 44. Then you got Rick Reeder, and then Chris Waller. Hassett's well below. Call sheet doesn't even have Hassett anymore. And my thoughts were like, if you listen to that interview, he's like, I just don't want to, when he said, I don't want to lose Kevin Hassett because he does such a great job in his position. It sounds more like his comments sound more like regretful, like regretfully we're going to lose him, but I don't want to lose him. That's what it sounded like to me. And the market obviously doesn't see it the same way that I do, but I've been trying to figure out why what could really dislodge the dollar and move the euro higher. What could be the catalyst? And that in my opinion is like this outside risk. But when do you think, Tracy, and let's continue this conversation, when do you think that the Fed or a new Fed chair is going to be announced by President Trump at this point?
Well, we don't know, obviously. Well, we did have Trump yesterday, getting back from Davos, met the press corps. He said he has picked who he wants, which is the first time he's really said that definitively, but he's not ready to tell us yet. And so, again, we talked about this. We were supposed to hear before Thanksgiving, then it was before Christmas, then it was right after the beginning of the new year. But now it does sound like he at least has picked someone, according to him. So, I would guess, within the next couple of weeks, perhaps, or, could be, it could be tomorrow. Who knows, to be honest with you, but it sounds like we're closer than we were before.
Okay. Well, yeah, and I know he's thinking about what the right time is. And I don't, it's like he's trying to find a yes man. And I look at the field, right? You got Kevin Warsh, Rick Ryder, Chris Waller, and then, obviously Scott Bessent's out there. He's not. But you think about the other guys, they are not yes men. And Trump really just wants a yes man. He wants control of the Fed. He believes that he could do a better job than the Fed. He needs someone that will say, I agree with you. We're going to go your route. And I just don't think that these three gentlemen right here are going to do it for him. I don't think they will. And that's why I'm like, what is that outside risk? Because Ryan, if we gotta move, like that, and Kevin Hassett was he got the nod. I don't actually think he'd even get the job. By the way, I think that he'd have a hard time passing through the Senate and getting the nod. But what would happen if Kevin Hassett was actually announced as the incoming Fed chair? What would happen to the dollar?
Yeah, I think what you said is right. It'd be a shock to the market. We'll see a big repricing because he does come across as a bit of how should we say, excitable.
Weaselly? Should you say weaselly?
No, I don't know, but yeah, he's probably a bit weaselly to Trump. But he's Mr. Bullish. The economy is going to post the next 2 quarters maybe above 5%. Things are great. Things are fantastic. Tariffs aren't going to be a big deal. It's all airy fairy stuff. But it's, as we know from a lot of people, it's one thing to say something when you're speaking on the sidelines. It's a whole nother thing when you're actually in the job. Look at when we get former Fed heads and former central bankers. They've got every opinion under the sun. I didn't have those opinions so strongly when they were in the job.
Right.
Can I just?
Yeah, please, Trace. This is your interview. You jump in.
I just think if it is indeed Hassett, he's going to have a big problem sort of rallying the troops within the Fed to get a consensus on rate cuts because one, he's seen as an outsider. He's seen as the DC guy. He has no central bank experience. And so I think if he does get the position, it's going to be a lot more difficult for him than it would, say, Warsh or Waller.
100% agree with that.
I think it may be a wake-up call for him. As I say, you think you can do the job until you're actually in the hot seat.
Right. Yeah,
100%.
That's true. Well, hey, Ryan, I'm gonna start, talking with Tracy here. I hope you can stick around. If you can, you can. I know you've been hosting all the shows today because K-Man's enjoying a little bit of R&R. So, please stick around if you want. If you have some questions for Tracy too, you feel free to jump in. If you need to bow out, I totally get it. Because I want to talk to Tracy a little bit about this move in precious metals. We have, obviously gold's approaching 5,000. Silver is approaching 100. And I didn't get a chance, Tracy, when I was on Ninja Trader with you, to talk about platinum. Platinum is absolutely ripping balls right now. So you got these huge moves in precious metals. Can you give us a little bit of color on what's driving it and what's going to continue to drive these prices?
Yeah, I mean, I think, well, gold is obviously monetary metal, right? We have central banks starting to buy gold in the West, where we've seen, central banks, Asian central banks have been buying en masse since 2022, actually have been buying since 2011 is really when all central banks kind of flipped to the buy side because they used to sell gold, but really started in 2022 after the Russian invasion of Ukraine, and we seized Russian assets. That kind of was a wake-up call for central banks and saying, hey, maybe we need some security here, so let's start buying gold. And then what has followed is we have started to see Western central banks start buying, particularly Poland, who has been buying en masse over the last year and a half or so. And you have to understand, when central banks buy, they don't care what price it is. They're not looking for a deal. They're out there.
Right. This is a balance sheet thing. They're not scalping. They're not. Yeah. Right.
Right. And so it'll be interesting if we see more Western central banks start buying like Poland has. But so you do have that behind it, and a lot of the geopolitical issues and uncertainty around U.S. policy. Kind of Trump likes to shake it up a little bit, even though we know how he operates. It's still a little bit worrisome for other countries. And so it's not surprising that we see that demand. Obviously, the retail market has just woken up. And so we're seeing demand for that, particularly over the past year. We're starting to see, last year we started to really see inflows into the ETFs, into which we hadn't really seen before. I mean, gold made a huge move like that, break above 2000 was huge, and retail never really, got into that, right? We didn't see those flows into those ETFs. And so this is all these new flows are just pushing this market higher and higher. Now, when we go over to the silver market, and platinum is they're both considered monetary metals, but they also have dual purposes, in the fact that they're industrial metals. So silver is going into its 6th year of a supply deficit by over 150 million ounces, or tons, actually, sorry. And with the AI data center build out plus renewables plus EVs, we're not seeing a stoppage in demand. And you have to realize how silver is 70% of silver is mined as a byproduct of some other metal that they're mining. There are very few just dedicated silver mines. So there is also a mining constraint there as well. And so we've got silver bid, and then platinum, also a monetary metal. We're starting to see interest in that, both silver and platinum, because they are less expensive than gold, and investors that maybe don't want to pay $5,000 an ounce for gold could get into another metal for a little bit less expensive. And then, of course, platinum's kind of getting the sympathy bid, but also it really started to break out when we started to see EV sales not being exactly what we thought they were, and the fact that we're going to need more platinum for, say, catalytic converters than we thought we initially did, because we weren't seeing that changeover, particularly in the United States, to kind of those aspirations that once were on the EV market.
You talk about now that probably shifts. This is going to shift my conversation over a little bit too. And thank you, Tracy, for that. And it's going to shift my conversation over to like what's happening in the energy markets. Crude oil is it rallied above the 50 DMA. It's capped by the 200 DMA. I think all of us could technically look at crude oil, and I would say it's trapped right now. But what's going to dislodge the move in crude from here? Would you think?
Well, I think that, and I've been talking about this. I think this is a story for H2, particularly because I think seasonality is playing a big role here right now and why we're kind of trapped. And really, for all intents and purposes, oil companies like steady oil prices. And so while this might not be fun for traders, this is okay for it's okay for producers. Obviously they'd like it higher, but if we could stick around here, they'd be happy with that. That said, we still have Iran still kind of up in the air right now. We've kind of shifted that risk because we have Russia and Ukraine talking again. We may have a peace deal there. We're not putting tariffs on Greenland and on Europe for Greenland and invading Greenland. So that kind of risk is off the table, which gave us a little bit of a lift. But now what's back on the table is the Iran risk, because Trump has said yesterday that, he's sending an armada over into that region. So we have, he's sending Air Force carrier there. I think it's the USS Abraham, as well as some fighter jets. So just in case. But I think that's
just in case.
So I think that's keeping in bid. Obviously, if anything happens with Iran and this leads to some sort of military confrontation, that would force crude oil to wake up, because then the fears would come in again. If it will Iran shut down the Strait of Hormuz or not, and to whom? And so that would be a very big issue, since a lot of oil goes through the strait.
I sure as hell wouldn't want to be short crude oil going into the weekend. I mean, it seems like a lot of action happens on the weekend because the Trump administration wants to make sure the markets are closed to mute any like instant damage, whether it's equities or maybe, crude prices, even though we get gaps. But I don't know. I sure as hell wouldn't want to be short or short crude oil over the weekend. That's for sure.
Yeah, absolutely. And it's kind of been that way lately. I mean, back in the day, everybody was like, don't be short crude over the weekend. I mean, that was kind of like, it was a kind of a give me Friday trade, which was really nice. But
it was very predictable and nice.
It was a predictable market and nice. But it seems like, last couple of weeks, then maybe that trade is back in play, at least for now. Works until it doesn't.
Right. Well, okay. Well, let's talk about something that's actually been moving quite a bit, and nat gas. And I'll just say that my son, who's in Mississippi, he went back to Ole Miss last Monday. Before he left, I'm like, hey, he's like, I'll never wear gloves, Dad. Gloves, Yeah. I'm like, are you sure you don't want gloves? And he's like, no, I don't want. I'm like, how about your heavy jacket? And he's like, no, my puffer jacket's fine. I'm like, okay, all right. Daddy doesn't own anything, so now my kid's going to be chosen in Mississippi forever, for the next week and a half, and they're probably going to lose power. But a lot of the United States is getting hit dramatically by this winter storm. I mean, I think even in Florida, you guys are cold. So what is that what the catalyst is driving nat gas right now?
Believe it or not, it is. It's weather related. Obviously, we're up to 55% on peak, which is absolutely ridiculous. But it's because the storm is going to hit like 200 million Americans, and it's not isolated to, say, the upper Northeast or upper West Coast. So it is weather related. There are also fears because it's going to snow in Texas. Believe it or not, even though it has snowed there before, obviously a lot of natural gas production is in the Permian, in Texas, as well as we have major export hubs there. And when it snows in Texas, the wellheads are not really weatherized for that, even though it's happened in the past and nobody's really taken these precautions. And so there is a fear there that this could kind of halt some production, as well as some exports. And, you know, we also just yesterday we had North Dakota shut down some production because it was so cold there. And so there is always that fear that we have some shut-ins as far as production is concerned. So.
But so with all that being said, I know nat gas. I mean, the technical response from the 618 was really quite awesome. I mean, I this one went right under the radar. I wasn't even looking at it.
Me neither.
I know. And then next thing you know, somebody was like, "Did you see nat gas yesterday?" And then I pulled it up. I'm like, "Oh crap! It was up like 2%." And then it was like up another 5% the next day. I totally missed that. But I guess the question is now, do you think this could really break it out? Because my opinion is, if you think ahead, it's going to warm up again.
Exactly.
People are going to look past all this. Do you really chase it up here at 550?
No, absolutely. Do not chase it up here, because as soon as the weather passes, this is going to probably fall back into its, regular trading range. We'll probably fall back into that 450, 350 area rather quickly. So, definitely do not chase this, and definitely do not chase this into this weekend if the weather doesn't turn out as bad as it thought. Weather people are wrong all the time, or whatever, it doesn't turn out to be as catastrophic as far as production is concerned. That gap down on Sunday could be really painful. So do not chase it into the weekend.
And speaking, and AJ asked, can you short nat gas? I mean, what the futures contracts on the CMA are quite expensive. I don't trade nat gas, but you are very familiar with how futures work. So can you short nat gas?
I mean, you can. There's a micro contract. I would not suggest the
full
big
size
contract is very expensive and tick value.
When did they go? When did they put in a micro? I don't remember.
It was like a couple of years ago.
Oh, okay.
They put in a micro. So there is a micro contract, or really you could just buy options if you are so inclined to short it.
Yeah, there you go, AJ, just to answer your question. And the nat gas move has been absolutely berserko. Hey, I know we got just a couple more minutes, and I don't want to keep you here longer. I mean, we've been on a show forever. It seems like all day today, but it's only been an hour. And just so you guys know, I'm not an advocate of saying, hey, go watch Tracy over at Ninja Trader Live. Because it's at the same time as the F.A.C.E show. But I will say this, if you go anywhere, please go watch Tracy. If you're not going to watch this show, please go watch Tracy. Or,
on Fridays, you can watch Blake and I on Ninja Trader. There you go.
There you go. Hey, but I gotta ask you this before we wrap things up. What's really on your radar right now? What's something that if you're like, shoot, I really wanted to talk about this topic today, what would it be?
So really, the thing I've been harping on really is the energy sector in general. I think that it's very undervalued right now. I think H2 is going to be the move in crude oil because everybody's just kind of waking up to the fact suddenly that we don't have enough energy for all these data centers. You had Elon Musk, right, saying we have all these chips. You mentioned that we have all these chips, but or Jimmy mentioned that we have all these chips, but they're going to sit in a warehouse because we don't have enough power to power them. Sure. And so what's really interesting is we're starting to hear some rumblings that they actually might use crude oil as direct burn, which we do only as a backup and at some very old backup facilities. But they certainly do it in the Middle East en masse. But if we start having to bring that around as an idea, that also could be a huge catalyst for crude.
All right, very good. I appreciate that. You know, Nancy, who I just met, actually, was it last week, Nancy, already out of New York? She asked, could you give an update on First Majestic, on your position that you talked about on Substack? So that would be AG, I believe. First Majestic, I mean, silver, I mean, just ripping. I mean, look at that chart. That's
I'm
just
still
ridiculous.
holding.
You're still holding. Well, why not? I mean, if it can reach 24, why can't it reach 124? I mean, look at that chart. That's so explosive. So you're still holding it, not worried about the fact that it's okay.
Yeah, I know this is crazy, but I am still holding First Majestic. I'm still holding any junior minor that I have. I'm not getting out.
Okay.
I'm not.
All right.
I'm not getting out. But you know, I've moved my stops up. You know, I'm not going to let the position come back against me entirely. Obviously, I'm managing it, but I am not ready to get out yet.
Okay. Yeah. So when you see an explosive move like this, where the trends are really taking hold, Tracy just said something really smart. You know, just make sure you got trailing stops in, or you're looking at previous, you know, resistance levels, turn support, keep your stops around there so you're not giving back too much. And maybe even trimming some positions along the way isn't a bad idea either, is it, Trace?
100%.
All right. Well, Tracy, you know, I'm one of your biggest fans out there.
Likewise.
We've known each other for a long time, and Tracy and I actually got a chance to meet each other last year. Yeah, actually last spring at the Money Show, and Lisa, my wife, Tracy, and I, we hit the blackjack tables till like 2 a.m. I think I can't remember.
I think we did.
I had a little bit too much to drink that night, so we
It
had a
was
great
fun.
time. We had fun and we made money and we walked away winners, which is awesome. So
There you go.
anyway, Tracy, it's always a pleasure to catch up with you. Love having you around, and can you just let everybody know? Nancy mentioned your Substack, so can you mention to everybody what's the best way for them to follow your work?
Yeah, so obviously I'm on X at Chigirl, CHIGRL. I have a Substack, renegaderesources.pro. And then I'm on Ninja Trader Live every morning at 8 a.m. to 8:45.
Right. And here is Tracy right here. If you guys don't follow her on Twitter, she's got a gazillion followers. She's amazing. Like I said, I've met her in person. She's the real deal. And yeah, if you're like, you should be listening to the F.A.C.E show, but if you're going to leave here, go listen to Tracy. All right. Or listen to the two of us on Friday together.
Yes.
Yes.
Everybody
yes.
should do that.
Yes. So Tracy, it has been my pleasure, and I know everybody really loved to have you here. So I'm gonna let you go. Enjoy your Friday, and you know, I'm gonna be catching up with you a little bit later this morning.
Yep. Perfect. Looking
all right.
forward to it. Thanks, guys. Have a great trading day.
Thanks, TGIF, everybody. Thanks for tuning in, and don't forget, I will be filming the week ahead video, and make sure you get signed up for the Trading Analytics newsletter, or our newsletter, so you're up to date on Trading Analytics and our upcoming release, which is just a few short weeks away. So you guys have a great weekend, and I will catch you on the week ahead video. And for those of you that are Forex Analytics subscribers, I'll see you on the Morning Edge in approximately 12 minutes. All right, have a great day.